The moving average crossover strategy is one of the most popular and simple strategy, and it's probably the first strategy you encountered. But how does it actually perform over a long-term period? How much money would you make if you used it for a year? Hey everyone, and welcome back to Trading Intel. Today, I'm revealing something that could change the way you trade forever. If you're new here, don't forget to subscribe. I've just completed a massive back test of the moving average crossover strategy using the 5-period and 10-period moving averages. If you're a trader, or just someone who's looking to get started, this strategy is one of the simplest, yet most popular methods out there. But does it actually work? How much money would this simple strategy by itself have brought you in 2024? Well, I back-tested this strategy with over 33,000 trades in 2024, yeah that's right. 33,532 trades to be exact, and the result will definitely surprise you. But before we actually get to the result, I want to ask you one question. Did you expect something so old, so simple, so widely known to work? Take a second to think about it, because everything is linked, and your study, your career, your life are all affected by the way you think. And trading is a good way to reveal your weakness, so you can improve on them. This is why I suggested my friends to try out trading, not to make money, but to experience how different people battle in the same market, and learn from the mistakes other people make. And of course, you would use a demo account so you don't lose money. Now let's break this down. We've got a total of 33,532 trades, and out of all those trades, we have 123,000 pips from winning trades. On the other hand, the losing trades came in at a whopping 157,000 pips, and the winning rate is even below 30%. Sounds pretty bad, right? If you listened to those guys telling you to use this strategy and jumped into market, you would have lost 34,000 pips in 2024, which is approximately 34 times of what you invested. But lucky for you, you found this video, and I will tell you how exactly you can use this simple strategy to your advantage. Before you write this strategy off as a total failure, let me explain why it's not the full story. The total pips lost are negative, but what's really crucial here is the breakdown of the winning trades versus the losing trades. When we look at the profitable trades, it paints a picture of opportunity. This strategy had a win rate of only 30%, but the profitable trades covered almost 80% of the losing trades. So what does that tell us? Even though our overall trade sum is negative, a key takeaway is that when this strategy wins, it wins big. The average pips of a winning trade is 11.92, while the losing trades average on 6.8. And here's the real kicker, the average trade held for only 8.55 minutes. That's right, just 8.5 minutes on average. If you can consistently catch those winning trades, you're looking at a strategy that can really blow off with profits over time. But how can you catch those winning trades while avoiding the losing ones? It's all about the right risk management. You need to experiment with this strategy on a demo account, try out different stop losses to cut out big losses, take profits to lock in your profit, combine it with some other indicators, or just get that feeling in your head. But on a strategy like this with less than 30% win rate, it is really hard to get it to work. If you want to see some results with different stop loss and take profits, different indicators, or want to share your thoughts and experience, drop a comment below. The purpose of this channel is to reveal the secrets behind those fancy looking indicators and strategies, so you can make better decisions. Imagine if you didn't watch this video and jumped straight into trading with this strategy, so make sure you hit that like button and subscribe.